Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. From the opening ceremony of the 2024 Olympics in Paris and a tech sell-off that on Wednesday wiped away $1 trillion in market value from the NASDAQ 100 to a strong U.S. GDP report and a flood of corporate earnings, including the first of the Magnificent Sevens to report. Tim, this past week, it was a lot.
It really was. You didn't even...
I'm tired.
You didn't even mention politics, Carol.
Oh, yeah, there is that. Nothing happening there.
Yeah, nothing happened. Hey, on the business side of things, this first hour, what you need to know about results from at least one of the Mag 7s, Alphabet. And then with a snapshot on the consumer side, Whirlpool's CEO on the quarter and whether or not the company's in play.
All right, everybody, we mentioned the Olympics. They are underway in Paris. We are already setting our sights on 2028 when the games are in Los Angeles. So too is the city of Oklahoma.
Wait, what?
We're going to explain.
All of that to come. We begin, though, with one of the big earnings of the week. Alphabet, the parent company of Google, saw shares drop after it sunk more resources into its drive to outmatch rivals in AI, fueling spending higher than analysts expected.
We love AI. We don't love AI. Don't do it too much. Do it a lot. What should we do? That's kind of where we are. All right. Even so, Bloomberg Intelligence senior tech industry analyst Mandeep Singh says Alphabet could see margin improvement in the second half despite the CapEx concern.
I think search once again performed very well. It was better than consensus. And with Alphabet, whenever search beats consensus, you know the operating margin beat will come. And that was the same here. The only number that disappointed was the YouTube ads revenue.
Yeah, that was surprising.
And
I watch a lot of YouTube. I don't know what's going on.
Yes, because you could pay to get rid of the ads.
Yeah, we watch them sometimes.
Up until last quarter, they made it up through better YouTube subscription sales. Now, that doesn't seem to be the case because the YouTube subscription number is reported alongside the App Store revenue. So it's hard to unpack whether that was the weak part or the App Store revenue was the weak link. But clearly, YouTube was a disappointing segment in the results.
Investors don't seem that disappointed. I mean, shares of Google right now, they're bouncing between red and green. But I mean, we're talking small moves. And look, is this like a kind of ho-hum earnings report?
I think, look, when I look at search growing mid-teens, that just tells me, you know, a company with $200 billion run rate in search business, 90% market share, still manages to grow double digits.
So it's experimental AI is working?
It's working, and it's maintaining market share despite competition from ChatGPT, Bing, you name it. Everyone keeps talking about how they
He just said Bing. Is there really competition from Bing?
Well, Bing has integrated ChatGPT now, so that was what Satya Nadella was most excited about.
I am curious about the lack of ads that I see when I do a Google search and I see the experimental AI result. It doesn't seem like they're making money from me.
Yeah, but if you go back in time, Google only monetized 70% of their queries are not monetized, only 30% are monetized. And that too, it's a very keyword driven business. So, you know, people bid up for keywords. That's what drives the ad pricing. And in this case, you know, unlike social media that can increase ad loads, Google is not increasing ad loads. It's still keyword driven, and they're able to maintain that share, you know, despite ChatGPT coming in. And for certain queries, I'm sure people are going more to ChatGPT than coming to traditional search. But I mean, I think Google has a competing offering with Gemini Advanced, and that will be a subscription revenue stream down the line. So in short, they've been able to maintain their market share despite all the threat. And I think that's good news for us.
Stock is down about 1% here in the aftermarket, but it's been bouncing around. Stock's up about 30% year to date. Forward PE of 24. Alphabet has gained more than 16% since its blowout first quarter report. And Red Brown, I want to bring you into it, watching it as well. You know, join the conversation here with Mandeep. I mean, I'm wondering too if this is a quarter that, you know, safely, easily lives up to expectations. margins.
Yeah, I think Mandeep really hit on obviously the two biggest things that jumped off the page to me as well, which was search and YouTube coming in a little softer. But the other thing that's really jumping out to me is actually CapEx. If we think about, how are they competing with these other companies on Gen AI, that's where we'll see that investment. And from what I can see, CapEx coming $13 billion. That's, I think, the biggest ever for Alphabet. I think that kind of really speaks to where they are headed and kind of another doubling down on this commitment, and it seems to be paying off. So between the search business continuing to grow despite its size, definitely interesting there.
I just want to, since you brought up CapEx, CapEx is directly related to their cloud revenue.
Yeah.
So the fact that cloud sales grew 29%, that CapEx is paying off. And,
money well spent, basically?
Money well spent. And actually, cloud margins grew 650 basis points. So for the longest time, Alphabet was criticized because cloud wasn't making money. It was a drag on profitability. Well, guess what? In just the past 2-3 quarters, they have shown over 500 basis point of margin expansion in the business. And that seems to be the trend. I think based on the guide, they're saying this will continue.
Well, this is what we always talk about, right? Because they, behind Microsoft and Amazon, right, have lagged in terms of the cloud. This shows that they're making progress.
Well, they had a slower start. So they were always the third player, the distant third player.
Yeah.
But look at the cloud revenue run rate now. $40 billion. Compare that to Microsoft Azure, $76 billion, and Amazon AWS, $100 billion. But at least they are growing 30%.
Yeah.
So we'll find out whether Microsoft Azure is also growing 30%, but we know Amazon AWS is growing 17%. So clearly their faster growth will help them narrow that gap.
Mandeep, speaking of AWS and Microsoft, what do these results tell you about what we should expect for those companies when they report later this quarter?
I think for Microsoft Azure, again, it's going to be a very strong quarter. You will see more than 30% growth. And Microsoft actually quantifies the contribution from generative AI workloads. Last quarter, it was 7 percentage points. I'm expecting it'll be slightly higher this quarter. But clearly, that's where IT spend is going, is in the generative AI workloads. And I think Microsoft will do better than AWS because AWS has been coming from behind when it comes to generative AI.
Okay, it's not just Alphabet, but one company that is seeing a more significant reaction. Adjusted earnings per share for the second quarter missed the average analyst estimate. They're also getting quite a bit of information from the long presentation about how many cars they plan to deliver, fewer than the 1.8 million cars they delivered in 2023. I know you guys are here to talk about Alphabet, but we can't let you leave without talking a little bit about what we saw with Tesla. Mandeep, what sticks out to you? I
mean, look, with Tesla, the fact that they shifted out the robotaxi event, that's where all the excitement was.
Yeah.
And, right now, they don't have a near-term catalyst. Everyone is excited about AI. That is where they could have shown their AI. I know humanoid robots are also a big deal, but they gave a date and then they backed off. So to me, that was never a good sign going into the print.
What about for you, Red?
Well, I think it's interesting that the thing to get excited about is kind of this pie in the sky idea of a robotaxi that no one has really been able to successfully monetize yet. I think that kind of speaks to where the company is at, maybe getting a little bit away from its true mission, which has always been selling EVs. But I think there are some positives to take away from this report. They did improve. They did actually beat gross margin expectations. I think that's going to be really important for investors going forward. Is how can this company continue to trim expenses if they aren't going to be seeing really aggressive top line growth as they were in the past? So good to see them focusing there on improving the efficiency a little bit.
All right. So just to wrap up, top question for Tesla that you would make on the call, real quickly.
It's got to be the roadmap to continuing. Where is the robotaxi? Where is the robotaxi? When is it coming? And again, is there anywhere we can continue to trim costs?
Red, just show me the robotaxi, Elon. That's
I want to know
says.
about the mass market car that's going to sell tons and
that's
tons.
The Model
and tons.
3.
Yeah, I guess. Okay. I don't know.
Go ahead. Investors care about FSD software attach rate. That's where the margins
Explain attach rate real quick.
So attach rate is any Tesla EV owner that buys the software. So, attaches, if I end up buying $12,000 of FSD software for autonomous driving, that's like 90% plus gross margin.
Yeah.
That's what investors get excited about Tesla, because they think that ramp will continue to grow, the attach rate will continue to grow.
Software company, not a car company.
10 seconds, top question for Alphabet on the call.
Alphabet, it's really about cloud growth. I mean, how fast can it grow and how long, the durability of that cloud growth, the 30% cloud growth.
Unbelievable. Mandeep Singh of Bloomberg Intelligence and Bloomberg News earnings reporter Red Brown. Guys, thank you so much. So appreciate it. This is Bloomberg Business Week.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Staying with earnings, Whirlpool, you know them, the owner of Maytag and others, lowered its full-year earnings forecast as consumers continued to shy away from big-ticket appliance purchases amid a weakening housing market. Right after earnings crossed, we checked in with the chairman, president, and CEO of Whirlpool, Mark Bitzer.
We actually feel good about our Q2. You know, we said also after the Q1 call, this year is all going to be about margin expansion with every quarter, and Q2 was a sizable sequential margin improvement, full point on a global level, led by our all-important North America business, which ultimately relied also on getting better promotion pricing. So we feel good about the progress we made. Yet at the same time, we also, knowing the weakness of a housing market, which is still emphasis on still just there, we don't see the housing market recovering as fast as we originally assumed, probably like everybody else when we entered the year. So we're still forecasting for Q3 and Q4 further margin expansion and improvement. So we feel good about the progression. It's just not happening at the pace which we had originally in mind, and the market is not recovering at the pace which we already had in mind. But that's, in my view, only a question of when it happens. It's not if it happens. It will happen, but it's just later than we originally assumed.
So, I always feel like when we talk with you, Mark, we think about like the pre-pandemic world, the pandemic world, and like our recovery. In terms of some of the numbers, the consumer trends, the buying patterns, is it below what we saw pre-pandemic?
Carol, you have two almost offsetting trends. One is the replacement market, which is very strong, also from a volume side. And that is ultimately tied to increased appliance usage following COVID and just all of the in-home trends and people just spending more time in home. So the replacement side is very strong. The unfortunate side from a business perspective, that typically doesn't come with a rich mix because it's not a discretionary purchase. The discretionary side, that is all tied towards housing, existing home sales, and new home sales. And that's the part which is way softer than anybody assumed at this point. And frankly, also with the numbers which came out yesterday on existing home sales, we're basically back to 2008 levels. I mean, it's kind of multi-decade low. And of course, that is the part of a business which tends to come with a richer mix for us. And that's the soft part. So you have two offsetting trends, which kind of overlay. I mean, we would, of course, going forward, we love to see the replacement trend. But at one point, you will see the recovery of discretionary side.
We've talked with you about this replacement versus, discretionary. What's the bigger part of your business? Is it people replacing items or saying, hey, I feel like doing this, discretionary?
Right now, the replacement side is well over 60%. And to put that in historic context, I mean, you typically had it for multi-decades on around 50 or even below 50%. That doesn't sound like a whole lot, but it actually makes a big difference in how the mix comes through for your overall business. So again, that's we like the volume, but it's not a very rich mix.
The biggest part of your market, or the biggest part of your business in terms of segments, refrigeration, laundry, cooking, a close third. Where do you see the most growth?
Again, it's right now overall, it's split on the categories. It's largely in replacement. So laundry is still very strong. Refrigeration in the kitchen is still a little bit softer because that typically comes with a replacement or remodel of an entire kitchen. But it's more of a high end, the entire kitchen suite, like KitchenAid suite or Jenner suite, which is right now softer than we would expect in a normal cycle.
All right. So we'd be remiss by not addressing the elephant in the kitchen, or if you will. Last month, Whirlpool shares, jumped. Reuters had reported that Robert Bosch was considering a bid for the company, that they've been pushing, that company's been pushing kind of outside its business. Did it make a bid for the company? What can you tell us about that?
Unfortunately, I can't tell you a whole lot more than we stated already, is that we just don't, as a policy, we don't comment on rumors or market speculation. As you know, it's been one article out there which triggered a lot of noise. And, we also in the past, there were rumors about Whirlpool in the past, and there will be rumors about Whirlpool going forward. We just don't speculate on and comment on these ones. So unfortunately, I know you were poking on this one, but I can't tell you a whole lot more.
I have to poke a little bit more, though. Is it a rumor? I mean, is the company for sale at this point? And is that something that maybe you've been getting some pressure from investors?
No, but so again, it is a rumor, and we can't comment, and we won't comment on this specific rumor. But we're a public listed company, Carol. So
I know.
By definition, there's in a certain way, our company is for sale every morning at 9:30 when the stock market opens. And right now, it's a good deal. So,
but there's sales and then there's sales. You know how this goes.
You're joking about saying it's a good deal, but what, in your opinion, do you think investors are missing about the Whirlpool story right now? Down 19% so far this year.
I shouldn't be arrogant about the investor. The market is always right. So what I think the argument for Whirlpool to be made is, yes, of course, we're still in a negative macro cycle, but that will turn at one point, and i.e. the U.S. housing market, and that will not be just a short recovery. That will be probably a multi-year recovery of the housing market. There's literally not a single company better positioned to benefit from the upside. We're a key supplier of 8 out of the top 10 U.S. builders. We're very strong with our portfolio in all the homes. So once that market recovers, I think we will be a disproportionate beneficiary from a market. And, it's by definition, the market is always right, but I would say that's the argument, particularly for the long-term investor.
Hey, Mark, we also have to go.
Wait.
Go ahead.
On that, though, if the market's always right, your stock rallied in a big way in June on this Reuters report that Bosch was considering.
She's still poking. She's poking.
So if the market's always right that they were excited about a deal, does it make sense to...
I appreciate your relentlessness in poking, but I can't and won't tell you a whole lot more. Listen, there's always speculation element which you might get in the stock, and as you know, there's short trades and people who are kind of not long-term investors. Right now, again, it's we had also these speculation rumors in the past, and again, I expect them also in the future, and that's just the nature of a public listed company. But again, you won't get a whole lot more from me on these rumors.
Okay, Mark, we'll end on something really easy for you to answer. U.S. politics. I know. Please come back after all these questions. We love you.
Us, please.
So, look, no question, front and center in a lot of investors' minds and a lot of voters' minds. But just very briefly, does it matter to you? You have a really complicated supply chain. You do some importing. Does it matter to you who's in the White House?
Tim, obviously, as you can tell from my accent, I should be careful about giving advice on U.S. politics. But I firmly believe, as a company, we encourage our employees to form a political opinion, and they should vote. Wow. But I'm not going to endorse any candidate, left or right. But we strongly encourage our people to form their opinion, get informed, and vote. Period. Now, of course, with our strong U.S. exposure also from a manufacturing side, we're not only the last American appliance company, but we have by a long shot the most jobs in the U.S. on appliance manufacturing. Of course, we have a strong vested interest in having a competitive and fair level playing field as a U.S. producer. So topics like steel prices, etc., they matter for us.
Right.
And we're not asking for subsidy or disproportionate help. No, we just want to be fair, and we want to be, we don't want to have our arm tied, with one arm tied behind our back as we fight. We're ready to fight, but it needs to be fair and level. And that's, of course, yes, right. That is a strong vested interest which we have.
Well, you're always fair with us, and always we appreciate your time. Mark Bitzer, be well. So appreciate it. Chairman, President, and CEO of Whirlpool, Mark Bitzer, joining us from Michigan. Shares of Whirlpool, they've been kicking around a little bit higher, a little bit lower in the aftermarket.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Mattel, you know their brands. I mean, Barbie, Fisher-Price, Hot Wheels, American Girl, many more. I mean, iconic toy brands. Well, they reported earnings this past week, the stock jumping after the toy maker reported second quarter adjusted earnings per share that came in ahead of estimates. Analysts, too, were positive on the results, highlighting the company's gross margin performance, which Morgan Stanley said had remained impressive.
Back to talk about the toy business was Ynon Kreiz, Mattel chairman and CEO. who we caught up with right after Israeli Prime Minister Benjamin Netanyahu's address to a joint session of Congress at the U.S. Capitol. And so we began by talking about the war between Israel and Hamas and geopolitical tensions.
Well, of course, this is an important part of our life these days, especially for me as an Israeli. I keep thinking about the hostages and pray for their release as soon as possible.
All right, one more question on politics. The U.S. race, which you know has consumed our world. The November outcome, does it matter for you as someone who runs a company, a well-known, publicly iconic brand, global company? Does it matter who's in the White House come November for you?
Of course, we are following everything very closely, the election process leading up to the November elections. But as a company, we have a long-standing history of working with all government leaders around the world, not just in the U.S. And we are focused on executing our strategy and confident that we can work with everyone across the political spectrum.
How would your strategy, Ynon, change if we saw former President Trump return to the White House and continue to see perhaps an even harsher stance toward China, increased tariffs, for example, that he's talked about? How would that affect your business?
Well, as a company, our job is to design a flexible organization that can respond and react to market changes. And I'm not commenting specifically about tariffs or China, but in general, this is what we do as a company. We have a very strong supply chain, a very versatile business model, and we are designed to be able to respond to changes in the market, in supply chain, or consumer taste for that matter. And this is something that we've done a really good job at over the last few years to create a flexible and responsive organization that can adjust and operate in different types of environments.
Ynon, what does flexible and responsive mean in terms of geography? Where is your supply chain right now in terms of in China versus other parts of the world? Like how much of your products that are sold around the world are made in China versus other countries?
In China, we make less than half of our product today. Industry average is about 80 to 85%, so we index meaningfully less than the industry. And we continue to diversify our manufacturing footprint. This is not necessarily in response to any geopolitical risk, but as a company, our job is to create that flexibility. So we're continuing to diversify our manufacturing footprint, our own factories, and some of the vendors that we work with across different geographies to make sure that we have the right capabilities and still the ability to mobilize resources and adjust to opportunities, as well as any changes in cost structure, in tariffs, and capabilities that we are looking to continue to add to strengthen our offering.
All right, so as promised, let's get to the quarter. Let's get to the business. So talk to us about the quarter that was and the outlook. Tell us about where you are feeling real strength, where you are feeling some challenges.
Well, this was a good second quarter and a good first half of Mattel, with significant gross margin expansion and improved profitability. We continue to strengthen our balance sheet and more than double free cash flow in the trailing 12 months. The industry performed better than we anticipated, and Mattel gained share globally in the second quarter and the first half. You talked about it before, Carol and Tim, I believe. We spoke about how we continue to position the company for growth. We expect to grow in the second half of the year and reiterated our full year guidance for the company. Looking ahead, we expect to outpace the industry, continue to gain more share in 2024, and grow sales and earnings in 2025.
So talk to us about some of the different brands. Fisher-Price launching, something I grew up with big time, launching its new line, Fisher-Price Wood, recently. How is that being received by retailers and by consumers? And do you anticipate that this could be maybe, a really top seller come the holidays?
Fisher-Price is such an incredible brand. It will be celebrating its 94th anniversary this year. Fisher-Price grew 11% in the second quarter, reflecting the early success of our new strategy, which is working well. We expect Fisher-Price to grow in the second half, to grow for the full year, driven by a new line of the wood segment that you mentioned that was now expanding globally, more core lines, product that are growing, and new franchises that we're adding to Little People Collector. The brand is just so much part of culture and has great trust by parents and families. We, in terms of performance in the category, outperformed the industry, gained share in the infant, toddler, and preschool category in the second quarter and the first half, and was the number one. Mattel was the number one toy company globally in the category.
Ynon, what about Hot Wheels? Growth in gross billings for Hot Wheels was relatively weak in the second quarter. Give us an idea of the catalyst. Tell the investing audience about the catalyst for a rebound for the holiday selling season, and if there are any new products or advertising coming to help push it.
Yeah, Hot Wheels is another incredible brand. Hot Wheels is on track for its 7th consecutive record year. We couldn't be more excited and confident about where Hot Wheels is growing. It grew in the second quarter 5%, with more activation planned for the second half. We're growing the adult collector line and more adult product. We're broadening distribution globally for Hot Wheels specifically, as well as the rest of the portfolio. And we expect to accelerate growth in the RC and skate lines. And of course, have another season of Hot Wheels Let's Race on Netflix that is launching this fall. So great product, activated by more content, and just a great line by Hot Wheels, on track for its 7th consecutive year of growth.
All right, so Hot Wheels for guys and gals, or kids, boys and girls, but also Barbie for boys and girls, whoever wants it. But let's talk Barbie, which is another one of the iconic brands, of certainly of Mattel. Barbie brand. I'm looking at, though, second quarter, right? Sales held back by a 6% decline in global billings for the company's flagship doll segment, which includes Barbie. Tough year-over-year comparisons in the second half. What are you continuing to see in terms of the impact that has had on the Barbie line? And do you expect the brand to return to growth maybe next year?
Barbie is an incredible brand that never sits still. And the movie expanded the audience even more, as you would imagine. Barbie was the number one doll property globally and continued to gain share in the second quarter. This year, we're celebrating Barbie's 65th anniversary with multiple activations and a new brand campaign that we're launching in the fall. We're launching also new segments supported by more shelf space in the second half, so Barbie will have even more reach into in the marketplace. We're launching a new offering for adult collectors as well as we did for Hot Wheels. And there will be more content on Netflix targeting the kids' audience. Barbie has consistently gained global share and continued to strengthen its position as the leader in the dolls category. And you know, Carol, very few brands have the cultural relevance as Barbie. And we couldn't be more confident about this incredible franchise and where it will go from here.
I am curious about American Girl, where it still fits into your portfolio, because it's interesting. It has evolved, and we kind of went back to the beginning of the brand before it was even owned by you guys, about that it really, taught young individuals, young women, young girls about history. And, they were very much tied to it. Now you've got a Gap American Girl, you've got Disney collaborations. What's the thinking around American Girl?
American Girl is a valued asset within the Mattel portfolio with significant fan base and great product. American Girl grew for the second quarter in a row. And we saw how American Girl is outpacing the industry in the large doll category and the overall doll category, especially in the 18-inch dolls, and was up double digit. We saw the flagship stores up, especially the new store in LA that was up high double digit. And we continue to optimize the retail footprint to make sure that we are creating a holistic omni-channel experience for fans. And as you say, part of the success is how we evolve the brand and how we infuse brand purpose, but also cultural relevance. And this is part of our secret sauce in the Mattel playbook, and how we continue to stay relevant and take brands that are timeless and make them timely, enrich and engage consumers today, and touch fans everywhere, touch their heart and mind, and do things that really matter in society and engage fans at an emotional level.
I have to ask you, I know there's been a Wall Street Barbie. I don't know that there's been an American Girl who works in investment banking. But having said that, a report on Monday that you guys have received a takeover approach from L. Catterton, the private equity firm backed by LVMH. You've come out and said that you believe the company can achieve a higher market value if it continues as an independent company. First of all, have they approached you? And are you open to doing a deal?
Well, as you would expect, we don't comment on speculation.
It's
but
just you and me
say,
now, Ynon. It's just you and me.
So just between us, just between the three of us. What I can say is that we're very confident in Mattel's strategy and our ability to create long-term shareholder value as a standalone company. This is what we're doing. You're seeing it in the quarter. You're seeing it at the start of this year. And you're seeing it since the start of the turnaround in 2018. It's in the numbers. It's in our growth in top line by $1 billion. It's how we continue to improve our adjusted gross margin by almost 1,000 basis points and guided to a higher number, another 100 to 150 points this year. Adjusted EBITDA grew 7.5 times since we started the turnaround. And our free cash flow went from a negative $325 million to more than $700 million at the end of last year.
Yeah.
And of course, we are now investment grade. It's about creating long-term shareholder value. And we are well positioned to build on our multi-year trajectory and continue to execute our strategy and expect the share price to reflect this over time.
What would make you do a deal?
Well, broadly speaking, we are here to create long-term shareholder value. And we do it in every day. This is what we focused on. And we consistently execute and deliver on the strategy. That's what we focused on. And we believe that we create that value, long-term shareholder value, as a standalone company.
So to that point, Lena Dunham stepping away from the Polly Pocket movie, what are your plans for that brand? And tell us what's the next, big screen. And, I think you guys have a ton of projects in the works. What can we look forward to?
Yes, we're very excited by the progress we're seeing in our film strategy, Mattel Films. Of course, the Barbie movie set the scene, but there's so much more. And we currently have 16 projects in the making. We recently announced a release date for Masters of the Universe. This will be June 5th of 2026. We announced a new director for Matchbox and a new movie for Monster High at Universal with Akiva Goldsman, a two-time Oscar-winning writer and producer. So there's a lot that is going on with everything at Mattel Films. The Polly Pocket project is progressing. Lily Collins is still attached, and we're very excited about how this movie is shaping up, as well as the rest of the film slate. That again is all about collaborating with leading filmmakers to make standout quality movies based on our iconic brands that will resonate in culture and appeal to global audiences.
Ynon, Ken wants to know, does he get a movie? Does he get a movie?
Of course, we continue to look for opportunities to engage fans every way we can. And one day maybe you will have a movie as well.
I'm hoping. I'm going to count on you. Maybe you can help me with that.
You had a Hot Wheels on your desk, but you gave it to my son.
I've had little cameos in movies, courtesy of Bloomberg Programming. Ynon, thank you as well. A lot on your plate. So appreciate all the time you always give us and find for us. Great to check in with you. Ynon Kreiz, of course, folks. He is the CEO and chairman of Mattel.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
The 2024 Summer Olympic Games officially kicked off this week in Paris, France. Earlier in the week, the International Olympic Committee announced that Salt Lake City, Utah, will host the 2034 Winter Olympics. As for the next Summer Games, they will be in Los Angeles.
Here's the kicker. 2 of the events will not take place in Los Angeles, but rather 1,300 miles east in Oklahoma City. The partnership between the two cities was designed to use Oklahoma City's existing sports facilities to keep costs down.
It's really interesting. So for more on how this partnership came to be and to get his take on the overall political environment affecting his city, because, there's a lot going on in U.S. politics, that. We were joined by the mayor of Oklahoma City, David Holt, who joined us not from Oklahoma City, but stay with me, from vacation on the Jersey Shore.
Hey, if you're mayor, you're always working, right?
I guess you go everywhere. We talked with him on the heels of the Republican National Convention, just to give you an idea in terms of timing. Stay with us. It will all make sense in a moment.
I am on vacation. I'm in like the jankiest studio environment ever, our bedroom. But the city, our city never rests, nor should the mayor. So I had to take this opportunity to talk to you guys today.
And as someone who is born and bred in New Jersey, still lives in New Jersey, thank you very much for being in our state.
Carol would be at the Jersey Shore right now if she didn't have to be here with us right now. We're gonna get to
I married a Philly girl, so that's how I ended up here.
Makes sense.
We're going to get to your city being chosen as a venue for the 2028 Los Angeles Olympics. But first, we're going to start with politics because you are a Republican and you were an aide early in your career to Speaker of the House Janet Hastert. You helped re-elect George W. Bush in your home state. You were in the Oklahoma Senate, yet you're not at the RNC right now. You're on vacation. Why?
Well, I don't know. I guess I haven't been in a while. There was a time in my life when I was a delegate to the RNC, and I've been very involved. And I served in the White House for President George W. Bush for 2 years in legislative affairs. But I have not been a supporter of Trumpism personally. And what I love, though, is that I serve in an office as the mayor of Oklahoma City, where technically I'm nonpartisan. I mean, I recognize when I go on national appearances like this, that's hard to process, and everybody's got to say how I'm registered, and that's fine. But all mayors, Republicans, Democrats, or independents, we really have found that we just got to bring people together. We really can't be partisan. We will work with whoever. And in our cities, no matter where you're mayor, you're going to have a lot of people who come from all those different perspectives. And nothing's going to get done if you don't find a way to unite people. My key focus is serving the people of Oklahoma City. And the people of Oklahoma City largely are very purple politically, and that's how we get things done. We find ways to set aside those things that divide us and find common purpose.
It's interesting that you say that because we speak with Mayor Maddie Parker, the mayor for Fort Worth, quite regularly, and she sort of gives a similar answer that she has an R by her name, but doesn't necessarily believe in the sense of what the National Party is doing. And I'm wondering if that makes your job as mayor more difficult, or if it actually just doesn't matter because what you say is you're a nonpartisan mayor. But like you said, your pedigree is in Republican politics.
Well, I think, I've been mayor for 6 years. Maddie's been in office for several years as well. I mean, ultimately, you build trust with your voters regardless of their registration. And I think I've long since passed that threshold with people in my city who are not registered Republicans. I think Democrats and independents know that they get a very pragmatic approach and a very open door from me. So maybe initially, maybe they would have been suspicious that, that I was going to be farther to the right than they would have liked. But I think they have found that, again, my sole purpose really is to find that outcome that I think is attainable at every level of government, that outcome that represents about 70% of people in the middle, regardless of their party registration. That's essentially what American democracy produced for 230 years. And it's really only in recent times that we've really struggled with that. But I think mayors are still practicing this art the way it was practiced for 2 centuries in this country. And we're often elected in a way, Maddie and I are both elected in a nonpartisan way that allows us to build that coalition. So, yeah, I think I've transcended party politics in Oklahoma City, and I'm glad to have done so. To me, that's how American politics is supposed to work.
But I do wonder, as a mayor, does it matter to you, not personally, but in terms of what you can or can't do, ultimately, who is in the White House come November?
Sure. I mean, largely in Oklahoma City and probably in most cities, we've learned how to be somewhat self-reliant. But if we can get assistance from the federal government, we like that and we prefer that. And we've had some great examples over the last few years. We got direct funding through the CARES Act, which was actually under President Trump. And then we got direct funding through ARPA, which was obviously under President Biden. And then the bipartisan infrastructure law is a huge benefit to cities. We've already gotten over $100 million. Other cities have gotten a lot more, and we certainly have hopes and expectations of getting a lot more as the years advance. So, the last few years have been very beneficial for cities. Again, if they aren't, then we figure out a way to get it done anyways. But obviously, when we have an administration in the White House that's sort of pro-city, understands that American cities are the chief economic and cultural engines of the country, that does make our life a little easier. And we communicate and work together as a nation of mayors through the U.S. Conference of Mayors for that reason. I mean, we do care what happens in Washington, and we like to speak with one voice. I'm actually the current vice president of that organization. I'll be the president in 11 months. And that's an important opportunity for us to speak with one voice in Washington, and we do it often.
Mayor Holt, talk to us a little bit about what you guys are doing for the Olympics. Because at first, to be quite honest, when our producer was laying it out for us this morning
I saw it on the calendar. I saw it on the calendar and I was like, what? This makes no sense to me.
Wait,
because
aren't the
Olympics are in LA.
Right.
Yeah.
And so what are you doing? Tell us about what you guys are doing.
Absolutely. And I may just at a macro level kind of explain that for 30 years in Oklahoma City, we've been making, I would say, kind of historic investments in our city. I mean, it is definitely, if you're in urban circles, you kind of know the Oklahoma City story. We've been passing by huge margins, these major initiatives after major initiatives. And as a result, it trickles down to the two venues I'm going to talk about here in a moment. We basically invested in two particular sports and ended up kind of being at the right place at the right time. We have the world's greatest softball stadium. That is like really beyond argument. The second largest softball stadium in the world is half the size of ours. Like we just doubled down on softball. We are now the home of the Women's College World Series every year, and this is a major capital for, if not the world capital for softball, is right in Oklahoma City. The other thing that happened to be fortuitous was we made a huge investment in whitewater. We have really the only whitewater course west of the Mississippi. And this started by putting dams on our river just because 30 years ago, just because we were sick of mowing it. We wanted some water in our river. We wanted a better aesthetically pleasing body of water, and one thing grew from the next, and eventually we had this rowing community. Eventually we decided to invest in it through whitewater to kind of have all of the paddle sports there on our river. And lo and behold, obviously LA gets the 2028 Olympics. I became really good friends with Mayor Garcetti back when I got elected in 2018, and late in that year he first broached the topic. So it's actually been a 6-year journey. He first broached the topic of hosting whitewater in Oklahoma City, which obviously, so I think I'm like most, people in America and around the world. I consider the Olympics like the brand beyond all other brands. I mean, it transcends sports. So the idea of getting that in Oklahoma City kind of was beyond our wildest imagination. And 6 years later, now the conversation includes softball as well. And LA 28 announced a few weeks ago that it is their plan to host all of the whitewater sports. It's actually at least 6 different gold medals in all of the softball tournament in Oklahoma City. That's nearly 2 weeks of events. We'd have 300 athletes, 200,000 tickets, and an opportunity for tens of millions of people in that part of the country to have a direct engagement with the LA Olympics. So obviously we're very excited. I do want to say there's still some process still remaining. The LA City Council has to consider certain aspects of this proposal from LA 28. And we want to be deeply respectful of that. But just to get to this point, even where we're even having this conversation, is obviously a big deal for Oklahoma City. And I think kind of reflects a renaissance that's been happening maybe below some people's radar, but definitely is positioning us as, a top tier American city, something I certainly couldn't have said 30 years ago. But this overnight success has required 30 years of investment in venues like these that we're going to enjoy and put forward in the 28 LA Olympics.
It is pretty cool how it comes out. Although I have to say, I was just checking. I'm like, it's 1,327 miles between LA and Oklahoma City. It's a 20-hour car trip. I mean, so I guess you guys are going to be putting up athletes, obviously fans. Like, there's a lot, and I know you can probably only talk about so much, but there's a lot of logistics to all of this.
Yeah, I think we are been in this conversation for a while, and we're fully committed to providing, the kind of energy and experience that the fans and the athletes expect. And it does appear, that LA 28 is absolutely committed that the athletes will still be able to participate in the opening ceremonies, the closing ceremonies, possibly both. But in the meantime, we're going to, I think, treat them so well that they'll ultimately be grateful that they got that opportunity. But we'll obviously probably have to prove ourselves in that regards, but we feel really confident that we're going to be able to provide that dynamic environment. And I think, the big picture here from sort of an Olympic movement perspective is that, the IOC wants to see cities not keep investing in venues that don't have a long-term operating plan, right? And so these two venues don't exist in California. They arguably don't exist anywhere west of the Mississippi, right? So, I think that you'll see maybe more of this in the future. It is a little without precedent right now, with some occasional exceptions. I mean, people have, observed that Paris is holding surfing in Tahiti or whatever. I mean, so there's always certain things maybe that move a little bit farther. But I think moving forward beyond LA, I think you're going to see more of this because we did go through that period for those who followed the Olympic movement where, cities were building these mega stadiums that they just didn't have a use for beyond the Olympics. So I think we're helping LA present a more sustainable games, which pleases the IOC and the Olympic movement. And we're just so grateful to have that opportunity to support LA and to support these Olympics, these LA Olympics, and this partnership, obviously, I hope will be mutually beneficial.
Hey, Mayor Holt, beyond the Olympics, I want to speak a little bit about the local economy in Oklahoma City because the city is certainly known for quite a bit: energy, agriculture, aviation, aerospace, logistics. What would you say is the area, the sector where you see the most growth opportunity?
Well, probably just for sheer volume, it'd be aviation and aerospace. We have a big Air Force base, Tinker Air Force Base, in our city limits. 30,000 people at least drive in there every day. And that has had a lot of spin-off activity, which we've obviously been very grateful for on many levels. When I talked about these investments that we started making in our city 30 years ago, part of that was a response to the economic depression that we experienced in the 80s, which was largely due to an over-reliance on just one industry, oil and gas. So ever since, it's like our vision for city leadership has just been anything we can do to diversify. You name the economic purpose and we'll be there, right? Because we've just got to find other things besides oil and gas. So aviation has been the biggest. But I mean, we got all kinds of stuff going on. I was part of hosting a premiere of Twisters Monday night because we have this,
the new one.
This growing film industry in Oklahoma City. I mean, there's lots of cool stuff happening in many different sectors.
Mayor Holt, we'd be remiss not to ask you. We've got about 25 seconds left here. Any signs of economic slowdown or recession, just quickly?
A little bit. Our sales tax growth, and that's a big leading indicator for us, is slowing down. It is not like down year to year, but the growth is less than it was in the past. So we're being a little cautious for sure, especially from a city budgeting perspective.
All right. Well, we count on you guys to get some idea of really what's happening on the ground among the nation's cities. David Holt, enjoy your time on the Jersey Shore, Mayor of Oklahoma City, Oklahoma.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including the New Jersey-based music venue home to Bruce Springsteen that has become an international pilgrimage site for rock fans and musicians alike. New York Times political correspondent Nick Corasaniti on his book, I Don't Want to Go Home, The Oral History of the Stone Pony.
Plus, our Pursuits team asks, is health span more than just a money grab? We're talking about a host of startups that promise to slow the aging process.
First up this hour, as you know, we had a lot thrown at us this past week thanks to a deluge of earnings, the aftermath of President Biden dropping out of the race for president and Vice President Kamala Harris stepping into the spotlight and very likely heading the Democratic ticket. We still also have two wars, Russia, Ukraine, and Israel, Hamas. And, there's just so much coming at us, Tim, right now.
Yeah, there really is. I mean, the problems, the stresses, the innovation, the backdrop, and the politics of it all. It's the bread and butter of our next guest. David Bach is president-elect of IMD. It's a global executive education platform. It's also a business school. His recent columns cover everything from future-proofing business for any presidential outcome to when CEOs should actually take a stand.
So IMD is a top business school, as you said, but we're really distinct from other peer schools in that so much of what we do is focused on executive education. So,
which is why the salary part might be a little bit high.
We love our degree programs. They're our soul. They're terrific. But, really what we're best known for is to work with companies, to work with leaders on their challenges. And as you said, there are many of them right now.
And those are non-degree programs?
Yeah, that's right. So about 80% or so of what we do is either solutions for organizations, custom programs, or we run a lot of open programs. in Lausanne on our campus there, in Singapore where we have another campus, and then of course more and more virtually.
What do you find that the executives want to get out of their class? Well, it's not, you can't really say classes. I mean, you could call them courses, but since it's not a degree program, how long are they coming for, and what are their goals in getting out of it?
Look, I mean, we run programs as short as 2 or 3 days. Some of them are as long as 6 weeks. Sometimes with companies, we do multiple modules over 8-9 months. One big trend that we've certainly seen is that companies have moved away from just doing this as a sort of nice to have. Every year they send a couple of people, but they really start working with us when they're facing major challenges, right? The business is slowing down. They're thinking about what's next in terms of innovation and how to deal with the volatile world that we're in. So we're working with them on developing the next generation of leaders and tackling the key challenges in front of them.
Many would say it's best to get the training before the stress points and challenges hit you. So having said that, how do you think about what, there's a lot that comes at executives. You think about the crises that we've had over the last, couple of decades, whether it's the great financial crisis, whether it was the tech fallout before that, whether it was the global pandemic, there's 9/11. There's a lot of things that are certainly hitting our world. So what's top of mind, though, in terms of what you think a leader needs today?
Yeah, so I think the emphasis actually is really on leadership development, right? How do you develop the self-awareness that you can be authentic in a situation like this? How are you agile? How are you resilient so you can deal with whatever is thrown at you and provide guidance?
What's authenticity? I want to go there because it's interesting. Going through the pandemic, going through George Floyd, you did see a lot of executives at prominent publicly held companies come out and really make some strong statements and take some strong positions. I think it's safe to say that it feels like that has calmed down a lot, and now we're kind of hearing that if you're run a publicly held company, like I keep thinking,
I think
of
it's
Whole
fair.
Foods,
not only
right?
it's fair to say that, I think it's fair to say that the pendulum has swung the other way, and that DEI is actually looked at as a sort of dirty word at this point, and it's pejorative. I mean, companies don't want to touch this stuff anymore.
Yeah, yes and no. I mean, I think even
in
after
the U.S.
In the U.S., but even in the U.S., look, after the Supreme Court, put an end to affirmative action in college applications, companies and their leaders still came out and said we remain committed to diversity and inclusion, perhaps not necessarily emphasizing their formal DEI programs as much, but you still have a young generation that you're trying to attract to your organization that wants to make sure that they work at a place where they belong. Right?
Tractor Supply came out with a statement that talked about they're not submitting data to Human Rights Campaign. They're eliminating DEI roles and retiring the current DEI goals while still ensuring a respectful environment. They're withdrawing carbon emissions goals and focusing on land and water conservation efforts. That's the pendulum swinging the other way.
I think, or you can call it the 2 steps forward, 1 step backwards. That tends to happen a lot when you're dealing with societal change. There's no question that the environment in the U.S., particularly around ESG, has changed. But certainly when you look at Europe, a lot of companies remain very much focused on sustainability goals. I think they remain focused on promoting equity. And I think a lot more companies do it quietly rather than doing these flashy reports.
Is there a real distinction between European companies, though, and U.S. companies on that?
I think European companies have moved a little bit later, and clearly the challenges and the issues are very different from the ones here in the U.S. But, we're seeing a lot of European or Europe-based companies that are operating globally wrestle with some of the same issues.
European companies, from an equity return perspective, have just been completely left behind by U.S. companies.
Yeah.
Why is that? And what do you hear from European leaders as to why European company leaders?
A really, really important debate right now in Europe is about global competitiveness, right? I mean, where does Europe fall in a world that sees the US and Asia, if you will, being the motors of growth? And, there's been a lot of emphasis on what do policymakers need to do, complete the single European market for capital, remove barriers, have smart regulation. So there's a lot there that needs to happen. I think European CEOs feel generally sort of pretty optimistic about the opportunities in front of them, but they're looking for policymakers to lend more of a hand and not put roadblocks in front of them.
The election outcome here in the United States, what's the advice? How do you kind of prepare the current C-suite and leaders today for the outcome?
So we had a session at our school at IMD a while back. Well, we're actually just about a month ago. And of course, it was like Biden or Trump. How do you future-proof your business? And now it's not Biden. We'll see if it's Trump. But, it was fascinating because so many business leaders around the world are so dialed into what is happening in the U.S. They're following everything because the implications are going to be so vast. And so one thing that was really interesting was actually we gave them sort of policy positions on cards. Half of them were Trump positions, the other half were Biden positions, but we didn't indicate which ones were Trump or Biden. And the first thing that was fascinating was we asked them to pick, on each issue, on a range of issues, the one that was best for their business. Nobody had a straight Trump or a straight Biden. Right? So
Love that.
Isn't that interesting?
What does that tell you?
Well, what it tells you is that the business
that
agenda...
That they're uninformed?
Cool.
Or
No,
just... What?
No, but I think what it tells you, well, we also mixed in some positions that we made up, and those were quite popular on top of it. So I think what it tells you is nobody is going to get the kind of policies across the board that they're looking for, at least in terms of sort of global CEOs.
What were the policies that in general?
Well, we had issues around what are you doing around sustainability and supporting electrification. There are questions around trade. There are questions about tech regulation, for example, right? Competition policy, antitrust policy. And nobody was thrilled with what they got from either politician.
Is there a takeaway for what the next administration needs to do for business globally?
First of all, I think the takeaway is that as a business leader, you just have to think about how do we insulate our business somewhat, right? What are some of the things that we should do no matter what? What are the big trends? Policy in the U.S. is going to be somewhat volatile. There's also going to be the question of, what can you get through Congress? What actually survives the courts? And so at the end of the day, you should probably worry a little bit less about this minutia of that part of a proposal and just think more broadly, what is the direction of travel and how do we set ourselves up?
That's a really interesting exercise.
It is pretty cool.
Yeah.
I love the idea of kind of sliding stuff in.
Oh, and sometimes,
right?
I mean, we actually
President
had
Bach.
in there, well, we had in there a very sort of radical proposal on phasing out fossil fuels, and a lot of the business leaders in the program actually chose that one because they actually said this would give us certainty and we can plan around it. Of course, that's not really on offer from either party.
That's pretty powerful. What you have to do on some of those things is have everybody to buy in, right? So that the playing field is level. David, how much does curriculum change for you guys from year to year?
So we never teach the same thing twice. It does change quite a bit. We're emphasizing a lot, of course, right now, the impact that AI is going to have on the business. We're thinking about AI both as a pedagogical tool, so how do we use it to personalize learning, but of course also what does it mean for business? What does it mean for service delivery? Where do you go in terms of innovation? So there's always some change. I think that's the most recent area where we're reworking it, but of course, a couple of things remain there. There's some foundational skills that sort of adapt only in terms of the way we deliver them.
I'm wondering how much of your time is spent in the classroom, or when you become president, how much will be time in the classroom versus out there raising money for the school? In the U.S., you went to Berkeley and Yale, so you understand how things work here in the U.S. The deans spend so much time raising money. Are you going to have to do that?
Yes. So I expect that I'll be spending the majority of my time externally oriented, right? That includes meeting with folks like you and sharing a little bit about what we do, but of course also meeting with our clients, meeting with alums, meeting with donors. I think for us, the client piece is probably a little bit more important compared to U.S. schools. Right?
The term client is not one you'd hear in
No,
the
you
US.
don't hear it from traditional business schools. Yeah. So we work with, we are an academic institution, but we have borrowed, with pride from professional service firms and how they work with their clients to solve their problems. So I'll do a lot of that. I still will teach a little. So I'll probably do about 15, 20 sessions a year. A session for us is sort of 3-4 hours. So it's not it's not a huge amount compared to my colleagues, but it is important to remain in touch.
Do you see yourself remaining in that position for a while and then going back to teaching? Is that how it works?
Yeah, that's usually how it works, right? It's sort of a temporary assignment. It's a 5-year term. You might do 1 or 2 depending on how things go, what my colleagues think of my leadership and the board. And then, you usually transition back into a faculty role.
How competitive is this landscape? And, I go back to my undergrad, did it in here as part of the Columbia University program, and they had a big executive education program, and the execs would go up, I think, like on Fridays, and it was a big deal. How competitive is this space still?
It's super competitive, and really what clients are looking for is clearly the return on investment, right? So one part is, of course, the the cost, right, of doing a program like this. But for a company in particular, like having 30 or 40 people be away from the office for a week, right, is an enormous investment. And so we owe it to them to make sure we deliver the kind of impact on their business. And so we've been working very hard over the last couple of years to come up with metrics for measuring the impact. The return on learning is really, really good for companies, but we have to demonstrate that, and we compete with others.
Is that the typical program that the people who the clients or the students that it's a week that they're away and that's it?
Yeah, I mean, that's what we have been trying to do. So it used to be longer than that. The time has gotten shorter. We're using technology to drive more impact. So very often before we meet on campus for a week, we might have connected virtually before. We've done some assessments, right? There might be some project work, some coaching after the program. So we extend the learning journey beyond the week so we have more impact. But yeah, a week out of the office is quite typical.
Is there like a certain executive or company that often comes up in conversations?
As a competitor or as a client?
No,
or?
as the students are in there.
Like,
case study or something. Like, I'm just curious. Like, people want to...
No, people do want to hear from whoever is sort of new. And so, of course you talk a lot right now about OpenAI if you're thinking about governance and what happens around technology. And of course, some of the companies you guys feature a lot, a Tesla is going to come up, or, a BYD and what we can learn from them in terms of their innovation. I've been doing some teaching around TSMC and how do we think about geopolitics through that lens. But then also part of our job is to put companies in front of executives that they wouldn't have been exposed to from a different sector, a different part of the world, that do something interesting that they can be challenged and inspired by.
Well, having said that, is there a company that you think about for the Bloomberg audience that they should be looking at, or a leader that they should be looking at that maybe isn't one that Tim and I talk about a lot?
There's so many companies doing really, really interesting things, but I'll tell you one that I use in many of my programs. It's a company called Zipline. I don't know if you can follow them, the drone company, drone delivery.
They've done stuff in Rwanda.
Look, exactly. I find them fascinating because, I work at the nexus of business and politics, right? And so regulation in the US and Europe would have made a business like this impossible. So what do? They pivot, they go to Africa, they save lives, and before you know it, they put together a coalition of stakeholders that opened doors for them, and they've moved much faster because they were agile, they were purpose-focused. And so I use them as an example relatively regularly in my programs to get companies to think differently.
Yeah, it's a really interesting company. We featured them quite a bit here at Bloomberg. Willingness to pay, a term you find in business school.
Yes.
The willingness to pay for an executive looking for an education is very high. For example, at Columbia, the executive MBA, how much do you think it costs?
Per student, I don't know, is it like $40,000?
$240,000 for 2 years.
Okay, so
that's the executive MBA.
That's 4 years. 4 years?
2 years.
2 years.
That's 2 years.
Yeah.
That's the executive MBA. So that's the part-time.
Sure.
Yeah, I mean, 2 years is, but
it's a big commitment.
Thursday, Friday, Saturday, or whatever.
Yeah.
Tuition for, that was last year. I can't find this year. Yeah. So it's expected to go between 2% and 7% per year. For the full-time MBA, it's like $90,000 a year. You got to throw on some more fees and
for 2 years.
And
yeah, you got to pay it twice.
Yeah, you got to pay it twice. That's a lot of money.
Yeah.
How much do you make more from the executives who come versus those in the 20% who are doing like the full-time MBA versus the executive MBA?
Yeah.
Because the willingness to pay for those execs, that's higher. And companies often pay for it.
They do. And again, you got to demonstrate that impact. So we're a nonprofit foundation, right? So our goal is to have impact on the world. Right? No, of course they are. I mean, it's hard to believe with some of the prices, right? But what we do is...
So it costs nothing, right?
Well, look, I mean, what we do is expensive, right? To have terrific faculty, bring them together, support them so they can continue to do research and thought leadership at the cutting edge, right? It's not cheap, and we put a fair amount of effort on raising funds for scholarships and running programs that, or doing initiatives that make programs accessible. But you're quite right. There are lots of options. So you were asking me before about competition. There are other top business schools, of course, that we compete with, but there are a lot of other providers. There's a lot of great content available. And so you really have to work hard on how do you design things that are impactful? How do you have pedagogy that lets people learn? As people get older, it gets harder to learn. So you got to think harder about how do I put them in situations where they can learn. And so we're making ourselves accountable for the ROI that we're generating. And when we can demonstrate the impact of learning, then the willingness to pay is clearly there. I think that's true both for degree and non-degree education.
All right. So just because we are Bloomberg, so for a week, what does it cost for a student?
Yeah, so we run week-long open programs. They tend to cost about $10,000 to $12,000 per week.
For an individual?
For an individual, right?
Okay.
Now, again, we call it a week, but it may have started 2 weeks before with some exercises and activities and assessments and continues beyond that. We have some programs that are, 3 days, 5,000 to 6,000. And then, of course, we have more affordable options. We run what we call sprints, 2 weeks, an hour a day, usually online. And, those are about $900. So it's still an important investment, but we do try to meet people at different price points.
Very cool stuff. No, a lot of specifics, which makes it super interesting to hear about. David, thank you so much. Good luck.
Thank you. I appreciate it.
Look forward to future conversations. David Bach, he's president-elect of IMD, soon to be president come September. As we said, it's a global executive education platform, joining us right here in our studio. David, thank you so much again.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Come take my hand, right now tonight to chase the promised land.
It's the boss.
Who doesn't like a little Thunder Road?
Who doesn't like a little Bruce Springsteen? Excuse me.
Well, the Stone Pony.
Yes.
You hear those 3 words, and if you're like me and many others, you think of one man.
Bruce Springsteen.
Yeah. And make no mistake.
As a good Jersey girl, I can say that.
You can say that. Mm-hmm. The boss certainly is a huge part of the Stone Pony, but as our next guest writes in a new book, it was just out last month, it's not just a place for Springsteen and his fans, Carol. It's a place that has become a, quote, international rock pilgrimage for all types of musicians. And despite the fact that once renowned venues like CBGB and the Cavern Club, which is where the Beatles started, those are gone. The Stone Pony, where Bruce got his start, it's still here.
Nick Corsaniti is a political correspondent for the New York Times. He's the author of a new book, I Don't Want to Go Home, The Oral History of the Stone Pony, and he joins us here in our Bloomberg studio. So someone who knows all about it. Welcome, welcome.
Thanks for having me.
Since you do cover, politics.
Oh, yeah, that's where we're going.
We need to kind of start there, if you don't mind.
Sure.
How are you thinking about this environment? How are you thinking about democracy right now?
Well, it's interesting how that's actually a word that's being thrown around a lot, especially from the right. President Trump's campaign, Speaker Johnson, Senator McConnell, they all had statements within an hour of Biden's letter being posted saying that this is undemocratic, you're disenfranchising the 14 million voters who cast primary ballots for Biden, and they cast it for Biden, not for Biden-Harris. And that, this was an anti-democratic move. Now, it's a bit of a difficult message for them to carry, just given everything that happened in January 6th and, a lot of voting laws that have been passed by Republican-led legislatures. But it's certainly something that's starting to catch on with voters. There was a poll in the Washington Post about 6 weeks ago about the issue of democracy and how important it was to voters, and it was more than 60% said it was extremely important. Now, the only thing that came close to that was the economy. So this is vitally important to voters.
Right.
Yet they actually said in these 6 swing states that they trusted Trump a little bit more than Biden to handle those issues. So it's something that's been defining for our politics for the last 4 years. President Biden made his last major address before the midterms on issues of democracy, and then Democrats did very well in the midterms. Right. So it's something that's very much at the forefront of the conversation as everything's happening with Vice President Harris, Democrats coalescing, and all of that.
Is it fair to say that voting has changed just in the 2 years since the midterms, or in the 4 years since the 2020 election? Like, have the rules in certain states changed?
Oh, significantly. And
has it become easier or harder to vote?
It depends on where you are, and it depends on who you are. There's been, efforts to limit mail voting especially. And so if you're in a state where they changed the mail voting rules and you were once a mail voter, there's some things that you now have to be aware of. Like, let's say in Wisconsin, there's been this whiplash about using drop boxes, which is where you can bring an absentee ballot, drop it off just like a mailbox. A lot of voters love that because you're not bound by whether a voting office is open or not. Let's say you can't go during work hours, you're a shift worker, you can only go at, say, 6 a.m. or 8 p.m., you drop off your ballot. It's easier. For the midterms, the Wisconsin Supreme Court said, no, you can't do that. So all of those voters couldn't do that anymore. And then the newly constituted Wisconsin Supreme Court, which now leans Democratic, even though they're nonpartisan, it was once conservative. Now they're putting them back, right? So maybe voters can go use that. So that's just one example of like the shifts. Now, and there's also the shift in the wholesale voting behaviors that has really kind of defined everything since the pandemic. voting by mail used to kind of be a Republican advantage.
Yeah.
In Florida and Georgia, like in Georgia, where it's become such a flashpoint where Republicans are limiting it, it was the Republican governor who brought it to Georgia. George W. Bush and Karl Rove were absolute masters of the vote by mail and using the mail. There's a whole book written about it by Sasa Eisenberg. So it's interesting to see the patterns behave, the politics change, and then there's a lot of laws that have been changed.
All right, speaking of a book, how does someone who covers voting rights and democracy at the New York Times
Come on, you need a break after doing that. You got to write about something completely different.
write a book about the Stone Pony?
So in between the 16 and 20 elections, I was the New Jersey correspondent. I grew up going to the Stone Pony, and I grew up, going to Asbury Park to see punk music. And when I was going in the 90s, in the early 2000s, Asbury was very different, to put it lightly. It was kind of dangerous. It was a ghost
rough,
town.
right?
It was very rough. There was abandoned buildings everywhere. There was this structure that was like an abandoned skeleton of like a apartment complex that had been failed multiple times. It just like, you couldn't believe it that on the Jersey Shore, this finite like Gold Coast on the East Coast, that this one town could just be so desolate. And that was my experience, but that was our stage, so we went. And then due to covering politics and moving to D.C. and going to college away from New Jersey, I hadn't seen Asbury for a while until I came back in 2017. And I was like, what happened? And so, as the Jersey correspondent, I was still a political reporter. So I still had to cover, the new Governor Murphy, Cory Booker's eventual presidential campaign. That was still like my main assignment, but I could still cover some of the culture. I wanted to tell this story about this town that bounced back, because especially having covered the 2016 campaign, we learned about, for every Asbury, there's 100 failed small towns, right? Yeah. I wanted to tell that story that got at the spirit of what Asbury is. And it's a music town. And so I didn't want to just be like, it's got a hotel and, some new restaurants and investors. And well, that's all important. And you have to tell that. That wasn't the spirit that felt important to me, to tell why this town's renaissance is important. And so I was like, hey, the Stone Pony's still there, somehow, magically, in like open defiance of the expected lifespan of a rock club. Let me use that as my narrative Trojan horse to tell the story of Asbury Park.
Nick, the boss, Bruce Springsteen, he writes an introduction. You got him for the intro. But it's not just Bruce Springsteen who you spoke to for this book. Steve Van Zandt, Niels Lofgren, the Jonas Brothers, all three. Are there more than three Jonas Brothers? There's the Jonas Brothers are three.
In the band, there's just three.
Okay, in the band, there's three. Jack Johnson. It's an incredible lineup. John Popper, Russell Crowe as well, Patti Smith. Talk to us about how you were able to get all these incredible people to speak to you for this.
From the political world, you're kind of used to just slowly pulling threads to get more people to talk to you. One leads to another. Hey, do you know this person? Can you help introduce me to this?
You got Chris Christie. I mean, that one makes sense because you're a political reporter.
I did.
You got Chris Christie.
That was actually while he was campaigning for president. We did a video interview.
You slide it in.
Yeah, we did a video interview, and that was like my New York Times thing. And then we shifted to lunch where we talked about the pony. And then I went to his event later and wrote a story off that.
Which interview was longer?
The pony one. He's a big fan, clearly. But it's, I also think what was interesting to me was how many people were willing to talk. And I think it just speaks to the weird draw and allure that the Stone Pony has for so many artists, in part because of the spirit that like Springsteen, Southside, and Stevie kind of like imbued in the place. Mm-hmm. Tom Morello calls them the good ghosts that are in the pony. And I think so many artists feel that. And it really is kind of like, it works for so many different genres, right? Like Patti Smith felt that, and she felt such a connection to the club because it felt like one of those clubs that helped her establish herself in New York. The same way that like Mike McCready felt the guitarist from Pearl Jam, felt an amazing connection there because it reminded him of his origins when like crowds were on top of you, and you could see everyone in the crowd so clearly that you could read their beer labels and what that felt like as a musician. There's a common phrase that like you play small rock clubs when you're on your way up and when you're on your way down. Mm-hmm. But I think the Pony kind of cuts across that a little bit because it creates that bond with a lot of artists that they want to get something back that they've lost as they've moved up, and they still play it. Russell Crowe's a great example. He was playing with this band 30 Odd for Grunts that he had for forever, and he booked a tour right before Gladiator comes out, when he's sexiest man in the world, one of the most A-list celebrities of all A-list celebrities. And he had booked Madison Square Garden Theater, not the full garden, but still like a 6,000 person venue. And then the Pony, it's about 600. And so once he's a megastar, they were like, well, you got to cancel the Pony because you're in the Radius now. And he was like, no, I'm going to cancel the Garden. I don't need that I want to do the Stone Pony. And like that and he has an interesting story in the book how he was actually going to play in New York on September 10th, 2001. So playing at the Pony actually might have, because he was staying at a hotel right next to the towers, might have, saved his life. But just the fact that he gave up 5,500 fans to play at the Pony and what that would feel like, I think speaks to how so many people feel about the Pony.
Are you not entertained? Yeah. I had to say that. I'm sorry. I just had to say that.
Good.
I mean, how did it come to be?
Well, it opened in, kind of a desperate time for Asbury Park. It had experienced pretty traumatic race riots a few years beforehand, and that caused some pretty big flight. But what that also did is, as Stevie Van Zandt says so lyrically in the book, it left it to us rockers, rogues, mystics, and renegades. And we'll always hear him saying that, in my head. And he just says it so effortlessly because he's just such a lyrical person. That created this scene of musicians that you wouldn't expect to find on the Jersey Shore. You find it in Motown, in Nashville, and New Orleans, but then for some reason you had it in Asbury Park. And once Springsteen starts taking off, people start paying attention to it, and then Southside Johnny and the Asbury Juke start. Mm-hmm. And they kind of really help create this sound of music. It's rock and roll with horns and gospel and soul and R&B, and it was a sound you hadn't heard elsewhere. And it was dancey, and people wanted to dance to rock music again, right? Like the whole guitar slinger thing, it kind of made people watch music. You were dancing again, and people loved that. And Bruce loved that. So he starts coming, people start learning about it. There's a famous broadcast of a Southside Johnny show in 76 on 11 radio stations across the country, and that wasn't done that much. So now there's a scene and a sound, and everyone wants to start coming. And then when Bruce becomes really famous, it also becomes his home. And, he says in the book, the things of celebrity that would bring you to New York and LA and all the things that normal people would do didn't interest me. What interested me was where I was from. Yeah. These people mattered to me, and this place was interesting to me in sustaining that scene. I mean, imagine right now, like if Taylor Swift picked a 600-person club and just showed up there on Tuesdays. People would be camping out, right? Like you wouldn't even be able to get within a 10-block radius. He was that famous after Born in the USA. So that he was still doing it created this spontaneity that lives on there. And it's maybe Bruce will show up, but also it's maybe like I'm seeing, a metal band and maybe Zakk Wylde shows up, or I'm seeing a punk band and maybe I'm seeing Taking Back Sunday and the guys from Brand New come out, or I'm seeing, Midtown and Brian Fallon comes out.
Because it just continues.
It's the spirit of the place in like the truest sense of the word, and it really, I think, has just stuck in a way that like you can't take it out, and that's what keeps artists from coming back.
You write in the book about the transformation of Asbury, and I'm wondering if the Stone Pony will live on into the future because it has changed. The area around it has changed so much.
It's a great question. I think everyone in Asbury recognizes that the Stone Pony is the kind of spiritual beating heart and soul of Asbury. And so as the towns come back in a kind of very organic way, they've done a great job at preserving that. There's new condos, the $6 million condo, there's new development, but I think they understand that you can't touch the pony. You have to leave it there. And you kind of have to leave the summer stage there too, because it's become such a part of town. And like, it's like this mini festival feel every night, and the sounds echo across the boardwalk. So like, even if you don't have a ticket, you were 3 blocks away on the boardwalk, you could hear, them playing Hopeless Romantic. And so
that's pretty cool.
You just can't remove that. If you do, it's not Asbury anymore, right? It's just another wealthy beach town.
2 bouncers did this, right?
Exactly. It started by 2 bouncers who were just like, I want to do my own thing. And they did, and it's had its ups and downs. It's closed twice, and it's certainly not a bouncer-run bar anymore. It's backed by major industry support, including Live Nation. But it persists.
Yeah, I mean, listen, everybody talks about Asbury Park. I feel like it's just something so much more. Nick, thank you so much. Really appreciate it. Nick Corasaniti, he has a new book out. He's, of course, political correspondent for the New York Times. The book, I Don't Want to Go Home, The Oral History of the Stone Pony. This is really fun. Thank you so much. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The cost of longevity, the best pasta in New York City.
Do those go hand in hand?
We'll explain. And the right hat to upgrade your summer wardrobe. It's all in the latest edition of Bloomberg Pursuits, which you can read online on the Bloomberg and in the August edition of Bloomberg Businessweek magazine. As we said, now on newsstands.
I promise also we'll tell you the right Rolex to go with that hat.
Not
or
like
at least the quiet Rolex.
Not like you know.
Yeah, not like I don't know.
but we know who does.
And that's Chris Rouser. He's the editor of Bloomberg Pursuits.
To help with
He's
all
here.
your Rolex needs.
All right, we'll get to Rolexes in a minute, but first, Carol and I want to talk about living forever because longevity is so hot right now. Is it Brian Johnson's fault?
It probably, I feel like Businessweek actually really brought Brian Johnson into the public conversation. And now, a lot of people are talking about him and following him, and he's making products. But actually, longevity itself is a bit passé.
Okay.
It's your health span that everyone's talking about.
Can you explain that term? I don't even think I know how to use it in a sentence.
Yeah. Well, we had arguments with the copy desk about how to capitalize it, whether it was 2 words, because it is kind of a new-ish thing. Lifespan is how long you live.
Okay.
Health span is how long you live well. So, if Americans are living longer and longer, everyone can expect to live to 77 or more. If you're living to 90, but you're stuck in a chair, you're breaking bones, all that stuff, it's not valuable time, and health span is maximizing that time so that you're not breaking bones, you're well, you're mentally aware, and you're having fun all the way until the end.
So I take a pill and that's how I do it.
You
I wish. It's
actually a shot, Carol.
Or a shot.
No.
So last year, Peter Attia's book Outlive came out, and it was very much about this. It was about medicine 3.0, which is preventative and predictive medicine. Rather than you bonk your head, you go to a doctor. It's like a doctor looks at your whole body. You talk about nutrition, you talk about fitness, you talk about all the different ways that you can expand your health span. So that has been very much in the public consciousness for a couple of years now. And now there are a bunch of companies that are trying to provide services to help you do that. Because if you read Peter's book, the recommendations for fitness and stuff can be 8, 9, 10 plus hours a week. You're just doing that on your own. Maybe that's like a little bit hard to manage. You're supposed to do stuff about your grip strength. You're supposed to be doing yoga. You're supposed to be doing an hour of V2 max.
Wait, grip strength.
Yes. There's a whole chapter on grip strength.
Okay.
So anyway, it can be kind of onerous. Once it gets to like rucking, which is carrying around stuff with carrying around a heavy backpack for an hour, like.
Is that why you load up your backpack on your bike?
No, that's not why I load up my backpack, but it's why people will walk in vests that are weighted.
Yes.
And wear backpacks that have just heavy objects in them without a purpose.
Right.
Well, her purpose is rucking. Excuse me.
Some of us carry around our children. Other people carry around 40-pound backpacks. So there's a bunch of companies that are here to sort of help you do this and manage it, do the testing, do the MRIs, do the fitness recommendations, do the nutrition, all that.
Chris,
Go.
Do you even ruck, bro?
When I got to the chapter in Peter Attia's book about grip strength, I was like, I don't know if I could do this. It's too much.
Let's go get a bowl of ice cream.
Yeah.
So wait, Mark Elwood, who wrote this story, right? He actually went through some testing, right? Because it involves, I feel like, there's one company he talks about, a lot of spitting into vials.
Yeah, so Mark did a company that's based in London called Viavi, and it was founded by Dr. Sabine Denai, and it's actually been around for a while. It opened in 2009. And this is really one of the great sort of originators of this. It's a nice, quiet office. You go, you get a bunch of tests in the mail before you go to actually even meet with a doctor. Some of them are spit tests, some of them are fitness tests, and then you go and talk to a doctor who really goes through a whole litany of exams. You do an MRI. They do DNA testing to see if you have markers for certain conditions that could become problematic when you're older. They do your weight test. They make you run on a treadmill, all this stuff. And then they come back to you with recommendations. And hers
That makes sense to me.
Yeah. Yeah. I mean, it feels like what you do in a physical, but usually you go for a physical, it's 20 minutes, and then you never hear anything, and you would find out whether your cholesterol is good or bad.
Right? Yeah.
Okay. It kind of makes sense to you, Carol.
It does.
I get it. It's expensive, though. It's the type of thing that costs a lot of money, Chris. Mm-hmm. Give us the cost, but also tell us, what does the established medical community say about this rise in health span?
So it can be quite expensive. I mean, the stuff that we're talking about, generally managing your health and doing a good job is something you can do for free. But these companies, we wanted to do this story because there's a new one in New York called Continuum, which is $10,000 a month. Equinox has a program which is $40,000 a year. They just started. So it can be quite expensive. But this idea of working with a doctor who you actually see and knows you well enough to make kind of preemptive recommendations is something that would be really great and is really widely regarded as like something that we don't have in the United States that we should have. The average person can expect to spend 17 minutes with a doctor during a visit.
We've all been there.
And maybe that's not enough.
Yeah, they book every 15 minutes.
Yeah.
We talk about
You
this all
had
the
an
time.
appointment this week and you're like, I know I'm going to have X amount of time. You had your list going in and you're like, I'm just going to go through it.
And the doctor still made a mistake.
Yeah, I made it. Yeah.
You caught him on the mistake?
Oh, yeah. Yeah, I caught him. I won't get into the
I'm not
details,
gonna
but
ask.
he definitely made a mistake.
In the U.S.
Let's just say he zapped the wrong thing.
Oh, no.
Yeah.
Tim's okay.
I'm okay.
Tim's okay. And the right thing got zapped.
Okay.
Anyway.
So you've still got your beautiful face.
That's all that matters. Thank you, Chris.
Jaw isn't intact.
But, in America, only 3% of funds that are spent on healthcare are spent on preventative medicine, and that should really change, actually. And so there's a lot that can be done in this department.
But what does the established medical community say about these types of products and services? Because you do quote some folks in there who say people know how to be healthy. They know that they need to eat well, move, i.e. get exercise, reduce stress. Those are the basics.
Yeah, there's critics of this sort of idea. I think nobody wants you to get in the way of you eating well, being healthy, exercising, doing stuff that will make you feel better when you're older. There is a group of critics of this field who say basically like we know what to do to live well. You eat well, you exercise, you take care of yourself, you have people to take care of you. So there's a placebo effect to a bit of it, which is what one of the critics says about this, which is like basically when you read Peter Attia's book, part of what you like about it is that it's telling you to do stuff that you already do. So you're like, oh, great. Like I already exercise. I already ruck, you know.
I see Chris rucking all the time.
Everybody, I don't think any of us ruck.
And they've done studies to show that even going to the store and putting like nutritional supplements in your basket makes you feel better. You know, there is just sort of this idea of like, I'm doing something. And maybe we definitely don't need all these MRIs. Like MRIs are a big part of this. Kim Kardashian was posting a video of her on her Instagram, unpaid, talking about how great MRIs are. And people were like, no, let's not recommend like unnecessary medicine and things that people can't afford.
Right. No, but there is something to this idea of how to stay healthier rather than like you go to a doctor when you're sick. You know, this concept of just taking care of yourself, right? Like kind of makes sense. Or you could just eat pasta.
Yeah.
I don't have an easy segue.
No, please eat pasta.
I love pasta.
Kate Crater,
Fortunately, we live in New York City.
Putting together a list.
Oh my God.
Lots of good choices.
So we have this regular thing we do where we talk to top chefs in different cities and we get their recommendations on their favorite places to eat. So, you know, maybe it's sushi in Tokyo and we've done pizza in Rome. And so we did pasta in New York City. This is for the August issue of Business Week. You may not think of August as a time when you want to have like a big hearty bowl of pasta in hot New York City. But Andrew Carmelini, who's one of the city's best chefs, said that he tried to take the carbonara off of his menu at Bar Primi in the East Village. In the summer, he was like, we should do something lighter. Like, let's make it less like creamy and rich. And people freaked out.
I love that.
And he was like, no, you know what? Actually, kind of in the summer, people really want a big bowl of pasta. So Kate came up with all these recommendations. There's actually 18 online, so you should go online to read the full thing. But there's the buffalo milk caramel at Don Angie in the West Village. There's peachy alla arrabbiata at Lodi in Midtown, which a lot of us love because we work not too far away. And the cavatelli with Jamaican beef ragu at Teresi in Soho, if you can get in, good luck, is really incredible.
I've actually eaten at Resdora with Kate, and that was quite an experience. I highly recommend it.
You know what I like about Pursuits
been a while,
and restaurants?
a long time, but
it's a
so
list
cool.
of places I've never been. Always.
It's aspirational.
It's
you
aspirational.
should go. You can go to these places.
There's one in Brooklyn, Daphne's in Brooklyn. You can get
let's go. I haven't been to that.
Beef cheek ragu. Let's go there.
What could be better?
You were talking about pasta earlier.
It's actually
It is
my favorite food. Pasta is my favorite food, so this is perfect.
It's kind of perfect. Speaking of perfect, how about picking a perfect hat? Tim showed me a picture of a hat he wears on the weekends.
It is not in this on this list.
It's kind of like he's on safari.
I can picture it. I know exactly what it is. My husband has the same hat.
See?
There's no sun penetrating any of it. I kind of love this. Some fun hats.
The type of hat that I wear is not the type of hat that one would wear if they were seeking a mate. Let's just say that. Okay. So it's a good hat for people who are coupled, you could say. Mm-hmm. Not a good hat for...
True?
Yeah.
This is the kind of stuff that comes out after the ring's on the finger.
Yeah. This is like, you know, you're not concerned in that department.
These are a mix, though. So we did a story that's like how it's not too late to be a hat person. August is a great time, maybe even a recommended by your doctor time to wear a big hat to get the sun out of your face. And we have a really great mix of cool hats and then also sort of silly hats. I would argue that the cool hats are the silly hats. There's a great visor that just says "Le Weekend" on it. I think, Tim, that has your name written all over it.
Please make it happen.
What I love about these, though, is you can get a hat for $50 up to $1,500. So it really runs the gamut.
It's a Bottega Veneta that's like a killer.
I was going to say, you think Prada doesn't make hats? Prada makes hats.
I kind of love the one with the netting. It's kind of unusual.
There's one with netting by Stephen Jones, who's a real like crazy milliner. Like haute couture. You see his hats on the runway.
Is the Prada hat missing some materials? Because it looks like you get a sunburn in the shape of triangles all over your body.
Yeah, the Prada hat is a bucket hat that has these. It's woven and has these triangle cutouts. I would say it's more of a fashion accessory.
Less about sun protection.
Less about theory hat.
Okay.
Yeah,
it's all triangles. I also do like the one. Is it number 5 on the list? It's from Paris, or Casablanca, Paris.
Oh yeah,
just really cute.
Yes.
Pastels.
Very cute.
Yeah, that's very cute.
Would look good on your daughter.
Yeah, that would look nice.
Before we go, because we love you and you are Chris Rouser, and we always check out what watch you're wearing.
It's an Apple Watch today.
The Quiet Rolex.
Always busts me when I wear an Apple Watch. Yes.
What is that? The Quiet Rolex.
So Rolex last year at the big trade show in Geneva launched a totally new watch line, which is unusual for them. They don't do that a lot, and it looks nothing like
looks like any a Timex, which I love Timexes.
I'm sorry. No, it's okay.
Oh, you should have seen Chris's face when Carol said the Rolex looks like a Timex. It's the last time we're ever doing a watch thing.
It does. It's very classic.
It's very classic. It's called the Perpetual 1908.
Chris is like, I can't talk to Massar anymore.
Maybe
I'm
the
done.
Timex is modeled after the Rolex.
I'm leaving.
Well, so it came out last year, and I didn't love it. I was like, I don't get why Rolex is doing this. It's a classic dress watch.
Yeah.
It came in yellow or white gold, black or white face. It looked very simple, and they have these like big sports watches that everyone really likes that from them. The cool thing about it, though, is that it has a transparent back of this line, these 1908s. And the whole thing about Rolex is they deprioritize the workings of the watch, which is what a lot of companies are like. We have these amazing movements, open up the back, you can see, look at our amazing watchmaking. And Rolex's thing has always been not about what their watchmaking says about them, but what you wearing a Rolex says about you. So you're not really supposed to be like showing off the mechanics and all of that. And so this line does show off the mechanics. And they came out with a new version, a new one this year that's platinum, has this ice blue guilloche dial. The line didn't make sense to me last year, but this one is so cool. It's very chic. I really get it. It's like a tradition. Platinum lasts forever. It's so strong. I really sort of see a new tradition coming out of this.
And only costs, what, $30,000?
Only costs $31,000.
It's like it is like a Timex. Yeah.
Whenever Brad, the new editor of Businessweek, asks if he sees a watch in the section, he says, "How much is that watch?" I said, "This one is a very affordable $31,000."
Yeah, it's a 5-figure watch rather than a 6-figure watch. Hey, a big thank you to Chris Rouser. He's the editor of Bloomberg Pursuits. You love him, and we love him.
We certainly do. That wraps up the weekend edition of Bloomberg Businessweek from Bloomberg Radio. I don't know if he still loves me since I made the comment.
I love it.
All right. Thank you so much for joining us, everybody.
I'm Tim Stenovec.
I'm Carol Massar. Have a good and safe weekend. Wear a hat, everybody.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.